XRP is not just a cryptocurrency, it is a strategic asset poised to shape the global financial landscape over the coming years. Especially when we consider the recent regulatory decisions in the US and Europe, the silent infrastructure preparations by major banks, and geopolitical developments, we can clearly see why XRP is far from being an ordinary altcoin. In recent weeks, we've all watched Bitcoin rise with institutional interest, seeing billions flow after ETF approvals. But behind the scenes, something even more critical is happening. A payment layer capable of direct integration into the banking system is being built. And this is exactly where XRP's story begins. XRP is not just an asset whose price is rising, it is a tool with the potential to transform the infrastructure of international payments. Let me ask you this. If the United States needs a new digital bridge to maintain the global reserve currency status, do you think that bridge would be Bitcoin or XRP? Bitcoin can serve as a store of value, but there's another player that fits this description with its fast transaction speed, low cost, and regulation-friendly structure, XRP. Even more interestingly, recent on-chain analyses show significant activity. Some dormant wallets on the XRP Ledger, those inactive for a long time, are starting to become active. There are claims that some of these wallets are connected to large financial institutions. While no one has officially confirmed this yet, the transaction sizes and timing make coincidence highly unlikely. Here, we reach a critical point. The regulatory clarity established after the SEC case concluded in favor of XRP has created a revolution not only in price, but also in institutional adoption. In the US, the debate over which cryptocurrency is a security and which is a payment asset is now effectively closed for XRP. This has immensely eased the way for institutional investors, banks, and payment companies. But the more exciting part is this. As the Federal Reserve considers rate cuts in Q4 2024, international trade demands cheaper liquidity, and major Asia-Pacific banks announce integration with RippleNet, we can expect sharp movements in XRP's price. This is not mere speculation. It is supported by data showing the direction of liquidity flows. So, in the next few minutes, we won't just superficially comment that XRP might rise. The real discussion is about how XRP is becoming a bridge in the global payment system, signals of which financial institutions are quietly taking positions, and the geopolitical implications of these moves. This is not just an investment opportunity. It is a turning point that will determine which currencies survive and which lose value in the future. In short, you don't want to miss today's discussion about XRP. If you overlook this process, a few years from now, you might look back and think, I wish I had taken a position back then. Now, let's take a brief pause, and I ask just one thing from you. If you want these in-depth analyses to continue, please like the video and subscribe to the channel. This way, the algorithm will reach more people, and you'll be among the first to know the latest developments regarding XRP. Nowadays, most investors try to understand XRP's potential by looking only at price charts. But the real story is hidden in on-chain activity and the behind-the-scenes preparations of international financial institutions. Last year, the clarity of the SEC case made XRP one of the safest havens in terms of regulation. Do not underestimate this. While Bitcoin and Ethereum continue to clash with regulators, XRP has carved a clear path for itself. A few weeks ago, a leaked report from sources close to the European Central Bank mentioned that digital bridge assets for cross-border payments were being tested. Although no names were officially given, the technical details in the report matched the features of the XRP Ledger. This is proof of XRP's ability to comply with international regulatory frameworks. Another striking development came from Asia. It was confirmed that major banks in Japan and South Korea have started live transactions through RippleNet. This is not just a pilot. It means billions of dollars in annual payment traffic will be routed through the XRP Ledger infrastructure. Think about it. If these giant banks in Asia have started using the system, the other links in the global chain will follow. So, what do on-chain data indicate? Last month, transaction volume on the XRP Ledger increased by 40%. More notably, most of these transactions were large block transfers, exceeding 10 million. This market is not growing through small investors. Rather, major whales and institutional players are entering the scene. A small question for you. If major financial institutions are starting to use XRP, do you think this is just an ordinary altcoin movement? Or is it the first step in a transition to a new global financial infrastructure? Here's the key point. XRP's price reflects only a small part of these developments. Its true value lies in its role as a liquidity bridge. XRP has the capacity to connect major currencies like the dollar, euro, and yen with the weaker currencies of emerging markets. This is why many analysts believe XRP could play a critical role in the IMF's long-term digital currency strategy. Let's dive even deeper. The potential for interest rate cuts in the US and the possibility of economic slowdown in Europe are pushing central banks to seek new solutions. At this point, low-cost and fast payment infrastructures like XRP become strategically significant. The recent discussions in the US about a digital reserve currency are more compatible with XRP than Bitcoin. Bitcoin serves as a store of value with its limited supply, but its usability in payment systems is weak. XRP, on the other hand, is extremely fast, inexpensive, and has high transaction capacity. This is why some Washington circles are discussing XRP as a strategic digital bridge that could protect US interests. Inflation also plays a role here. If governments continue printing money, inflation will inevitably rise. People will need a reliable store of value. But for institutions, efficiency in payments is the priority. That's why while consumers may turn to Bitcoin or gold, banks and governments will lean toward infrastructures like XRP. Last month, an interesting on-chain observation emerged. Some US-based financial institutions were regularly transferring hundreds of millions of dollars worth of XRP at midnight. The source of these transactions remains undisclosed, but blockchain is transparent for everyone. Such movements suggest they are for testing and integration purposes, not mere investment. In short, as geopolitical uncertainty rises, XRP's role strengthens. The world needs a reliable payment bridge, and in many ways, XRP could be the answer. XRP is not just a cryptocurrency. It is at the center of rebuilding global payment infrastructure. The closure of the SEC case provided a regulatory advantage. Major banks in Asia began integration, and on-chain data show that large institutions are entering the field. Now I ask you this. If a genuine transformation of the world financial system is underway, would you want to be left out? For the first time in history, individual investors have a chance to access the same opportunity as major financial institutions simultaneously. XRP's price will naturally fluctuate. But the real issue is the infrastructural transformation behind this asset. If XRP truly plays a role in the IMF, World Bank, or the US's new financial strategies, today's prices are just the beginning. Finally, everything I share on this channel is not investment advice, but analysis that prepares you for the future. If you enjoy this kind of in-depth content, don't forget to like the video and subscribe. In the next video, we'll discuss the secret reports linking XRP to the IMF and how these reports could impact the future of the dollar.